This inflation is not going away. Even Powell himself has had to admit that, this transitory stuff is not happening. So now it sets us up for a very interesting 2022, and we'll learn a lot about that and get a feel for that.
Now, I was just talking to Gary Wagner from the Gold Forecast, and he was talking about how even if the Fed became very aggressive at trying to curb this inflation, if we look at past history, for example, what we saw like in the 70s and 80s, it took 3 years of very aggressive Fed policy to get inflation under control. So even if the Fed is aggressive, which it doesn't seem like that's really an option at the moment, because the markets would crash, even if that were the case, that the Fed was going to be aggressive, it's not like inflation is going to go away for at least another few years.
Right. And the Fed used to admit this. I don't know if they do anymore, but they used to admit that any move they made in monetary policy, impacting the Fed funds rate up or down, took at least 6 to 9 months to have any impact at all. All right. So think of that and think of inflation continuing this level even higher through next calendar year. But the Fed's talking about, and the market is assuming a Fed funds rate hike maybe by June. So you got a full year now coming of inflation continuing to soar before anything. I mean, again, what are we talking about here? Moving Fed funds from 3% to 5%? No, we're going from 0 to 25 basis points. Okay. A couple other things come to mind. Gold rallied substantially in the period 2003 through 2007, from about $250 to all the way up to $1,000 really by early 2008. And in that period, the Fed hiked the Fed funds rate 17 consecutive times every quarter for 4+ years. They were hiking the Fed funds rate and gold was soaring, because at the end of the day, it's about real interest rates. The frustration we've had this year is that real interest rates, where you take like the 10-year note and you subtract the rate of inflation, it's like -5%. But all the computers that trade gold futures are basing it more off of real interest rates, off of inflation expectations. Okay. So where the inflation expectations have risen this year, going out 5 years or even longer, nominal rates on the 10-year have gone up about the same amount. And so real interest rates as measured off of that expectations is about the same, maybe even slightly higher than it was at the beginning of the year. And that's all part of what has kept a lid on gold. Tying this all back together to your original question, if we go, the longer we continue with inflation running it the way it is and getting even worse, the more those inflation expectations are going to rise. And then you combine that with, look at the bond market keeps rallying because of this idea that the Fed is actually going to make a policy error and be hiking too late. Those impacts finally kick in a year from now, just as everything's going into recession. We have a chance to see real interest rates, even versus inflation expectations, take off next year. And if they do, if that's the case, gold will make up for a lot of lost ground real fast.
With respect to really what gold has done this year, it's definitely surprised a lot of us, because we'd think amid inflation, we'd be seeing gold rise. What do you think has kept gold down?
It's that transitory word. The Powell and Yellen too convinced everybody, oh, no, it's just transitory. Remember that's been going on all year long. And they finally ran up the white flag. And people are figuring that out now, that it's not transitory. And we got some consumer inflation expectations just this morning as we speak here on the 13th, greater than 6% inflation next year. So it's that expectation that eventually inflation comes back down that is keeping the, projected real interest rate flat. Again, if the 10-year note got all the way up to 1.6% recently, it's back down to 1.4 today. But inflation expectations were just 2.6%. So that measurement is only -1. Well, we got to like -1.2 in August of 2020 when things were going crazy because the 10-year note was only at 50 basis points. So what I'm expecting at some point, because inflation I don't think is going away. This is a function of too many dollars chasing too few goods, whether it's too few goods based off of the supply chain issues or just too many dollars based on all this, Fed and other central bank policy. If inflation continues, then inflation expectations, the longer it goes on, the more you get used to it, kind of frog in a pot kind of stuff. So the longer it goes on, those expectations will rise. But now if the Fed starts hiking rates and everybody starts thinking, oh man, there's a recession coming, people start looking past the rate hike to the next round of rate cuts, the 10-year note stays down below 1.5%. inflation expectations move up from 2.5 to 3.5, and all of a sudden even that measures at -2. And that could really set off, the machines, the hedge funds, everybody else to start buying gold futures again. And we could, it's not going to take much, Elijah. You get out above 1900 and 1920, start making some higher highs, all $2,000 gold, and everybody think, okay, now, and everybody just starts piling in. The chart would suggest we've got a heck of a year coming up too. So we'll see. It's all going to be keyed off of those inflation expectations. And we'll know a lot more again after the Fed this week and then as we get into January.
What kind of price targets do you see for 2022? And do you see that silver will outperform next year?
Let's start with the first part of your question. I thought this year, again, looking at inflation, I thought for sure, I didn't think it would go this high, but I just thought inflation would start soaring, and it did. And I knew the Fed can't allow higher rates, especially, go back to January. We didn't even know much about the vaccines at that point. So I thought gold would re-rally from the highs of last summer based off the inflation and the low interest rates. And I thought we'd get to 2,300 this year, surpassed last year by 10%. Right. Oops. Got the macro part right, but the market fooled me. And really about everybody else too. It's not like, I'm the only idiot in the room. So next year. Okay. So I just kind of laid that out for you. I think hopefully it has a chance to build on its momentum and then take off. I did a really fascinating bit of technical analysis last week with a guy by the name of Chris Vermeulen, who runs a site called The Technical Traders. And he laid out on the monthly chart. Okay, we're not like just taking the daily chart or something and guessing. Well, we're guessing, but we're using the monthly chart. The monthly chart far more valuable for picking up kind of secular long-term trends. And he had 2 or 3 things that all of them projected out almost precisely to $2,700 gold. I know that seems crazy, right? But hey, look, as recently as March of 2020, gold was around $1,450. And then by August of 2020, it was $2,100. That's almost a 50% move, right? I mean, that just happened within the last 18 months. So what's 50% from here, from 1,800? Well, 2,700. Okay, so this is not like the rantings of a lunatic. I mean, we just had this happen in an environment that we might be heading into next year. So that's possible. On silver, yeah, what a fake out. I saw a tweet from David Morgan late last week, and I put it on my site. These guesses, even from all these bank commodity analysts of silver, 30, 32, 42, maybe as high as 48. I mean, there's like 20 different entries on a spreadsheet of everybody that expected silver to go higher this year. And there are a lot of commodities, whether it's battery metals, base metals, even copper, that had these massive runs, and silver just has had the runs. I mean, it's given everybody the runs. But it too has that kind of similar thing. It's just been held in check. It's been digesting the gains of last year by kind of flagging and going sideways all year. When it finally breaks out above 28, and then, when eventually it gets to where it trades with a 3 handle again, I mean, people are going to, it'll just be a momentum play. Like Bitcoin is, or some of the, stocks. It'll just kind of take on a life of its own. But for now, it just continues to flag. It's got to break out first. And until it does, we're all just kind of sitting here twiddling our thumbs.
I think that's so key. And a lot of people have been talking about this. If we look at the fundamentals and we also look at the gold silver ratio, it's not like this move is going to happen overnight, but it seems like it's setting up for something pretty big, because right now the gold silver ratio around 80 or so, 80 to 1. I mean, that's really high historically. And if we see a move for gold next year to 2,700, I mean, and silver moves as well. Normally silver moves faster than gold. So we could see quite a big move for silver then.
Yeah. And even in this last drop, we got slightly under 22 last week before bouncing. I still couldn't find, you might find a generic round at 26, 28. Eagles, because they're so hard to come by, because the problem is the mint are still in the 30s, and so there's still considerable demand, obviously, for physical precious metal. It's just the paper stuff that, we price ran up a month ago to $25.50 and spent 5 days trying to get above the 200-day moving average. Over the course of those 5 days, the category called swap dealers on the CFTC's Commitment of Traders report, over that 5-day period, the swap deal. And again, what's a swap? Okay, it's a derivative. Well, what's a derivative? Futures, contracts, and options. So these are the banks that deal with futures, contracts, and options. They doubled their net short position over those 5 days, from like net short 10,000 silver contracts, and net short 21,000. Price never made it through the 200-day moving average, and then it collapsed. And now they're back down to only 4,000. Okay? So as long as price remains in check, everything's kind of in this uneasy equilibrium between the price that's derived on COMEX versus this physical price that you pay at a dealer. Once it gets moving again, though, and silver is ripe for something like, what you've seen in copper or zinc, or any of the other base metals. Silver's ripe for something like that. But until it begins to break out, till it trades above 28, and that's 20 some odd percent from here, almost 30. And I don't know if that'll happen next year or not. I mean, it's impossible to say. But once it does, then we'll have something. The hard part is, giving yourself the mental duration to hang in there and wait for it to happen, because so many of us, have looked at this year thinking it would go this year and it didn't. So that's what makes it challenging.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.